Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohan R. Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. And today we are going to conduct special video on the topic notices issued beyond limitation period and defects in computation of limitation. So let's dive into it. Let me allow to share my screen. Notices issued beyond limitation period and defects in computation of limitation. So today's session focuses on one of the most critical and frequently litigated areas under the amended reassessment regime. Reassessment provisions have undergone a fundamental transformation post Finance Act 2021. While the intent is to restrict the arbitrary reopening, in practice, we are seeing a large number of notices failing on jurisdictional grounds, particularly limitation. So, this session is designed to help understand the current legal framework, identify fatal defects in reassessment notices, apply a practical litigation oriented approach while advising or responding. So let us proceed step by step. Importance of limitation in income tax proceeding. Limitation is not a procedural safeguard. It determines what jurisdiction itself. If the notice is time barred, the assessing officer never acquires authority to reopen it. So participation by the assessee, filing replies, or even completion of assessment doesn't validate a time barred notice. Please note down it. Very, very important. Participation by the assessee, filing replies, or even completion of assessment doesn't validate a time-barred notice. Courts consistently holding that limitation defects strike at the root of the proceedings. So it is very, very, very important. Let's understand statutory framework. Sections 147, income escaping assessment. Section 148 deals with issue of notice. Section 149 deals with the time limit for issuance of notice. Section 150 deals with no limitation in certain cases subject to safeguards. Section 151 deals with sanction for issue of notice. Section 153 deals with time limit for completion of assessment or reassessment, and Section 292B and 292BB limited curative provisions not for limitation. So limitation must be read holistically and not section-wise in isolation. Section 149 determines whether reopening is a permissible at all, and Section 151 controls misuse, though sanction. Even a valid notice fails if assessment is not completed within Section 153. Let's move on further. Evolution of reassessment limitation. Let's understand what is the legislative background. Pre-Finance Act 2021. So notice under Section 148 could be issued within 4 years, that is a normal cases, up to 6 years where income escaping is more than 1 lakh, and up to 16 years where involves foreign assets or income. So reason to believe regime extensive litigation on reopening after 4 years, and on post Finance Act 2021 that is effective from 1st April 2021, complete overhaul of reassessment provisions, introduction of Section 148A mandatory pre-notice procedure, information suggesting escapement of income, and revised limitation structure under section 149. So earlier law permitted wide reopening powers. Means earlier law, that is pre-finance act, it permitted wide reopening powers. Reopening beyond 4 years was routine, leading to heavy litigation. Change of opinion and borrowed satisfaction dominated disputes, and this background is essential to understand why the law was amended. So, Finance Act 2021 is a structural reform, not a procedural tweak. Reopening now requires what? Objective information and prior opportunity. That is very important. Opportunity of being heard. Limitation provisions must be interpreted in this restrictive legislative intent. Let's understand current limitation structure under section 149. Normal limitation is up to 3 years from end of the relevant assessment year. Extended limitation up to 10 years, that is permissible only if assessing officer has evidence of income escaping assessment is represented in the form of asset and amount escaping is rupees 50 lakh or more. So applies per assessment year and not cumulatively. So key clarifications here: extended limitation is exceptional, not routine. Burden lies on revenue to demonstrate that the existence of asset and quantification more than or equal to 50 lakh. So mere allegation or suspicion is what's insufficient. So extended limitation is exceptional and not routine. We need to be understood that, and 3 years is now the default rule. Extended limitation is permissible only and only when strict statutory conditions are satisfied. Both asset and 50 lakh conditions must coexist for the same assessment year. Very important. Both asset and rupees 50 lakh condition must coexist for the same assessment year. Escaped income alone is not sufficient. It must be represented in the form of an asset. Allegations like bogus expenditure often fail this test. So absence of nexus defeats what? Jurisdiction. Let's see common situations where notices are issued beyond the limitation. Many notices still reflect a pre-2021 mindset. Officers often quote Section 149 without applying its conditions. Such notices are routinely quashed by the courts. So, amendment doesn't reopen closed matters. Pandemic extensions didn't revive the time bad reassessments. So, this issue alone has invalidated thousands of notices. Very, very important. Let's see defects in computation of limitation. Now, practical issues: incorrect identification of relevant assessment year, mistake in determining end of the assessment year, computing limitation from wrong date. For example, computing 3 years from the date of information instead of end of assessment year, and also ignoring the transitional provisions. Finance Act 2021 didn't revive the time bad cases. Notices issued for assessment years already bad as on 31st March 2021 are what? Invalid. Extension under pandemic related laws cannot enlarge the substantive rights. So limitation must be computed from end of relevant assessment year. Even a single day delay is what? Fatal one. So courts apply strict interpretation and no equity in limitation. Next, defects relating to section 148A procedure and limitation. So let's understand that. Mandatory nature of section 148A. Failure to follow procedure makes notice invalid. There is a video on this section 148A on Taxpayers YouTube channel. You can go and watch that too. So common defects: inadequate time granted to respond, no supply of underlying material, non-speaking order under section 148A clause D. So section 148 process doesn't extend limitation. If final notice under section 148 is issued after limitation expiry, entire proceedings get void. So time consumed in section 148A proceedings must be within overall limitation. So section 148A is a procedural and not an extension provision. Time consumed in 148A doesn't save the limitation. Final notice beyond limitation invalidates entire proceedings. So the order must demonstrate the application of mind. Template or cryptic orders are jurisdictional defective. Courts treat this as a violation of statutory mandate. Next, move on to sanction-related defects impacting the limitation. So approval under section 151 is mandatory and jurisdictional. So defects include approval under section means approval by incorrect authority, mechanical or blanket approval granted after limitation expired. So sanction must exist prior to issuance of notice and not subsequently. It cannot be ratified later. So sanction is not a formality, it is a mandatory one. Wrong authority or post facto approval is what fatal one. It can vitiate the proceedings, entire proceeding. Section 292B cannot cure the sanction defects. Please note that section 292B cannot cure the sanction defects. Next, section 150, no limitation. What are the misuse and safeguards? So section 150 permits reopening without limitation only when reassessment is to give effect to what? Finding or direction of appellate or court order. Safeguard under section 150 subsection 2 cannot reopen if reassessment was already time barred on the date of the original order. So frequent revenue error was treating observations or incidental remarks as direction. So section 150 is a frequently misapplied. Only binding directions qualify. Already time barred cases cannot be reopened using this section. Please note, already time barred cases cannot be reopened using section 150. Next, curative provisions, what they cannot cure. Section 292B and section 292BB. 292B talks about cures only technical or clerical mistakes, doesn't cure lack of jurisdiction, limitation defects, and absence of sanction. And section 292BB applies only to service of notice, cannot validate the notice issued beyond limitation, and non-issuance of valid notice. So jurisdictional defects are incurable. Participation, as I said in earlier in my, I think, first or second line, participation by assessee doesn't validate time-barred notice. This distinction is fundamental in reassessment litigation. So many times revenue can take a stand that the participated by assessee and all that, but participation by the assessee doesn't validate the time barred notice. So it goes into the root of the cause. So next, understand the judicial principles on limitation. This is the conceptual takeaways. Limitation provision must be strictly construed, interpreted in favor of finality. Reassessment provisions are exception to finality of assessment, hence must be applied narrowly, and revenue cannot reopen on borrowed satisfaction. Circumvent limitation by creative drafting. Let's see the practical checklist for professionals. Before responding to or challenging notice, identify relevant assessment year correctly. Compute the limitation under amended section 149 and verify whether rupees 50 lakh asset condition is satisfied or not. Nature of asset relied upon. So examine section 148A compliance, date and authority sanction. So check if case was already time barred on 31st March 2021. So every reassessment notice must be independently audited by the professional. So never assume the departmental correctness. Very important. You can't assume the departmental correctness. They may go wrong. So, a structured checklist prevents avoidable litigation and client exposure. So, we should have a structured checklist for this purpose too. Let's see advisory and litigation strategy. Raise limitation objection at the earliest possible stage, preferably in response to Section 148A Clause B notice. Limitation is a pure question of law, can be raised even at appellate stage. Please note down, limitation is a pure question of law and can be raised even at appellate stage. So, read remedy appropriate where jurisdictional defects are apparent. Notice is ex facie time barred. So, limitation is a pure question of law. As I said, it can be raised even at appellate stage, but early assertion is preferable. So, don't wait till the appeal. You can raise it as early as you can, and so we need to be see whenever any notice received, we must have a structured checklist for this fact. So read jurisdiction is appropriate where notice is ex facie time bad and strategic silence may prejudice the case. So what are the key takeaways for us? Limitation is not a procedural technicality. Amended law has narrowed reopening the powers. Amended law has narrowed the reopening powers. Many reassessment notices fail due to why incorrect limitation computation and non-compliance with mandatory safeguards. Vigilant review of notices protects what taxpayer rights and finality and certainty in taxation. So reassessment is an exception to finality and must be strictly constituted. Post 2021, limitation has become the strongest shield available to whom? Taxpayers. So, mastery of this provision is essential for effective advisory and litigation practice. So, that's it for today. Thank you. Thank you so much for patient hearing. Please note down my contact numbers. And if you have any observation, suggestion, question, query, then do let me know on the given contact numbers. You can also comment below the video. So stay tuned to the Tax Guru YouTube channel. Hope you are getting valuable knowledge from all these updates and all these video series which are we are conducting on Tax Guru YouTube channel. So stay tuned to the Tax Guru YouTube channel. If you are not yet subscribed, then do subscribe Tax Guru YouTube channel. Thank you. Thank you so much. Bye bye. Take care. See you soon. Hare Krishna.